We don't set cap rates. We're small people. We're little people, I should say, not small people, little people. The people that set cap rates, these are the people with multi-trillion, trillion with a T dollar portfolios, the big movers and shakers like BlackRock, right? BlackRock's the largest asset manager in the world. They have a $24 billion real estate portfolio. They're already doubling it. They like real estate. And BlackRock is openly saying that climate risk is now central to its asset selection process, its entire strategy, not just real estate, but every kind of strategy, right? Imagine $7 trillion, and they're using climate risk as a central strategy. This is forcing BlackRock to slow down or stop investing in areas with high climate change risk. But they're not stopping there. BlackRock is now using its massive political influence to force states and local governments to take actions against climate change. And when they see states and cities not doing anything, they're voting against them with their wallet, their $7 trillion wallet. And this is creating winners and losers at a scale where we could see certain states and cities go up half a cap over the next 15 years. That's bad news. Caps going up is prices going down. And we could see others going down half a cap or even one cap over the next 15 years. For those of you that understand what cap rates are, you know those are gigantic numbers, right? They're absolutely enormous in size. And before you start clogging the chat with comments that this is all in the future, I'm going to bring up one of my scariest slides. If you thought that climate change hasn't already forced the market to offer discounts, you'd be wrong again. Parts of major cities like Miami, San Francisco, Boston, New York, and Tampa are now seeing discounts of 7% for properties with sea level rise exposure. I'm not saying these properties are going down in price. I'm not saying that you are seeing a 7% decline. But let's say all of the properties that didn't have sea level exposure in Miami were going up 14% over year. Well, the properties that do have exposure are only going up 7%. So you're seeing a 7% discount. Remember, this discount was 0% 5 years ago, right? So it's entirely reasonable to speculate that this discount could go from 7% to 15% within the next 5 to 7 years. A 15% discount could mean the difference between a winning deal and a money-losing deal. So watch out, take a look at these red dots that are on the screen, because I'm going to be publishing this information as I go on Multifamily U. And I believe that a lot more red dots are going to be joining these in the coming 5 to 7 years.